You see, we are experiencing the greatest transfer of wealth in history because of the pandemic. Interest rates are the lowest they have ever been in history. Banks are giving money away, and the rich are getting richer because they know where to put their money. Most people have no clue what's happening and would just watch their wealth shrink. Today's video is going to be data-driven. Put down 20% today and wait 5 years. How many people have already done that in 2021 to hedge inflation? The Q1 market report on pre-construction condos is going to give us an answer. Everyone is saying that the April market report showed signs of a cooling market. Are we seeing different trends on the low-rise versus the high-rise markets? Before we dive in, make sure you subscribe and hit the bell so you won't miss important market updates. All right, let's get started with the pre-construction condo report from Urbanation. Number 1, number of sales in Q1. Let's compare the sales in the first 3 months of the year for the past 5 years. We will start with Q1 2017. The yellow bar represents the new project launches, meaning projects that came out to the market for the very first time. The pink bar represents existing inventory in previous announced projects. So this could mean projects in various stages of construction. Some developers like to sell out their projects quickly, and some like to hold back on inventories so they can continue to walk up the price to cover the ever-increasing construction costs. So in 2017, we saw a record Q1 in pre-construction sales. Then the number came down in 2018 and 2019. Remember the first 3 months in 2020 just before the pandemic? The condo market was extremely hot, and that's also reflected in pre-construction sales. How do the first 3 months in 2021 compare to the pre-pandemic level? You see, we have almost caught up to the pre-pandemic level, and it is interesting to note that people are buying more existing inventories because there are fewer new condo launches this year. A total of 5,385 units were sold. Let's just say there are roughly 400 units in each condo on average. That means the market has consumed more than 13 condo buildings in just the first 3 months of this year. Number 2, absorption rate. The absorption rate tells us how fast the new condo launches are selling. Projects in prime downtown locations like the 8 Wellesley sold out in just 10 days earlier this year. But projects in less desirable locations will take longer to sell. In general, if we look at the Greater Toronto area as a whole, the absorption rate is roughly 60%. That means if 1,000 units were launched for sale during the first quarter, then around 600 units would be sold by the end of the quarter. Let me show you the absorption rate graph for the past 10 years. 2013 was the year when everybody said there was too much supply in the condo market and people were worried about a bubble burst. You see, the absorption rate was very low. For every 1,000 units launched into the market, only 300 units would be sold. Of course, now that we look back, that was the best time to buy, when there was a fear in the market. Then in 2017, the absorption rate shot up to 76%. This year, the absorption rate was up 76% again. What this tells us is that new condo launches are selling exceptionally fast. And that could be a signal to developers to launch more products and at higher prices. Let's take a look at unsold inventories. High inventories correlates to low absorption rates. 2017 saw the lowest unsold inventories, below 7,000 units, and pre-construction condo prices increased 36%. Now, we are sitting at less than 12,000 unsold inventory units. In Q1 2021, almost 3,000 inventory units were consumed. If we just continue at the same rate, we would almost running out of inventory in 12 months. So what we are seeing here is high demand and low supply. Number 3. Price per square foot. Let's focus on downtown Toronto because that's where most of the condos are. In Q1 2020, before the pandemic, over 2,800 units were sold in downtown. Then the pandemic hit and sales went way down because the market shifted to suburbs for the remaining of 2020. With vaccines available in 2021, things switched around. You see, the number of sales in Q1 2021 had already surpassed the pre-pandemic level. That also brought along a record high average price to $1,416 per square foot, 3% higher than the pre-COVID level. You would say that's expensive, but a 3% increase actually significantly lags behind the price increase in raw materials. If you haven't watched the videos on global shortages and Warren Buffett's interview, make sure you catch them afterward at the link below. The increase in construction costs hasn't been reflected in the unit price yet because the big developers most likely have existing contracts with prices locked in, and smaller developers may not have factored in the increase in their cost calculations. And yes, there are definitely risks of project cancellations if you buy from smaller or inexperienced developers. So in the next 12 months, I think we can expect to see more project cancellations, and we will also see a jump in pre-construction prices when the increase of construction costs starts to propagate to the end product. Like I said earlier this year, even though pre-construction is 15% more expensive than resale, it is a good deal to buy pre-construction now because of the time factor. You are buying a product that is going to take 4 to 5 years to build. It is very likely that labor costs, material costs, and government charges are going to increase by more than 15% over the next 4 to 5 years, let alone the cash depreciation over the next 5 years due to money printing. And you are not even paying full price now. You are only paying 20% of the price. Based on the Q1 numbers, many people have already cracked this code and buying pre-construction to hedge inflation. Now, let's take a look at the resale market. Number 1, year-over-year price change. From March 2019 to March 2020, the low-rise prices in the suburbs or the 905 areas went up for around 15%. Then the pandemic hit and the market was frozen. Keep in mind that this graph shows the percentage change in price, so this drop here does not mean a price drop. We went from a 15% increase to 0% increase, so that just means the prices were stable, no change. Then we know the market has gone pretty crazy, with prices up over 30% compared to a year ago. On the other hand, it is a different story for downtown condos. Prices were hanging on for a little bit after the pandemic hit, then they dropped as much as 10%. Since the vaccine announcements, people's confidence on the downtown core came back and prices started to climb back up again. Number 2, the price gap. Let's compare the average price of detached homes versus condos in the entire GTA over the past 7 years. Do you see an interesting trend here? When detached homes rose to the peak in 2017, the gap between detached and condos widened to almost $700,000. Then the gap naturally shrunk back to the $400,000 range. Now the gap is widening again. It is even bigger than 2017. The gap is almost $730,000. So what is going to happen next? The gap is going to shrink again. The prices for detached homes have become so high that people would go back to condos again. In fact, the latest April report gave us some hints. The detached home prices have finally come back a little bit. On the other hand, condo prices have not only recovered, but surpassed the pre-pandemic level. And the gap reduced a little bit to just under $700,000. With the current market conditions, I don't foresee the low-rise prices coming down by a significant amount. I would say they would more or less stay stable this year. I think it would be more likely for condo prices to go up and reduce the gap. Yes, so prices will continue to go up in general. You see, we are experiencing the greatest transfer of wealth in history because of the pandemic. Interest rates are the lowest they have ever been in history. Banks are giving money away, and the rich are getting richer because they know where to put their money. Most people have no clue what's happening and would just watch their wealth shrink. It is up to you where you want to put your money. If you believe in real estate, you can schedule a call with me at the link below. Make sure you subscribe and hit the bell so you are always on top of the market.